So what exactly is a lot? Well, think of it as the measure of currency units someone trades, pretty similar to how a carton of eggs is a standard way of measuring the quantity of eggs you'll purchase, with the slight difference that a lot in Forex is 100,000 units of currency. That's like buying 100,000 eggs in one go. Thankfully, you don't have to trade in such large amounts. There are also mini, micro, and nano lot sizes, which are 10,000, 1,000, and 100 units. You could think of these as buying a carton of eggs, a single egg, or just the white of an egg. So why is this important? Well, remember that in Forex trading, we measure currency value changes in pips. The larger the volume of your trade, meaning the more currency units you're buying or selling, the more each pip change can impact your potential profits or losses. It's a bit like selling and buying eggs. A small change in price per egg might not seem like much when you're just buying a dozen, but if you're trading hundreds or thousands of eggs, those small price changes can quickly add up. Now let's break this down a little further to understand how lots actually translate into your trade. Imagine you're trading the US dollar to yen pair, and you decide to trade a standard lot, which is 100,000 units of currency. If the exchange rates for US dollars to yen is 120.50, to find the value of a single pip, you divide one pip by the exchange rate, and then multiply it by the size of your lot, 100,000. This figure represents the value of one pip for the Japanese yen. So each pip change would represent an approximate change of $8.34 in the value of our trade. Now, when the US dollar is not quoted first, the formula changes a little bit. Now the value of a pip remains constant at 0.0001 for a standard lot of 100,000 units, because we're essentially calculating the change in the value of the US dollar directly. So let's imagine you're trading the euro to US dollar at an exchange rate of 1.1900. To find the value of one pip, divide one pip by the exchange rate, and then multiply by the size of your lot. This calculation gives us the pip value for the second currency, in this case euros, which would be 8.40. But since our trading account is in US dollars, we need this value in terms of US dollars. Therefore, we multiply our calculated pip value in euros, 8.40, by the current euro to US dollar exchange rate, 1.1900, giving us a value of approximately $10 per pip. Now keep in mind that the value of a pip can vary depending on the currency pair and the size of the lot you're trading. Your broker will provide you with this information, much like a recipe would tell you how many eggs you need for a cake. But it's always important to understand the mechanics behind it to navigate the market effectively.